as we stay in this space, another article I wanted to highlight, and there's a few more that we're going to get through before we finish up. But another article I wanted to highlight was actually, very similar in this space. When you think about compensation, when you think about equity, but also when you think about structure. And so, with these athletes changing the game, one of our previous podcasts was talking about how Shedeur was able to negotiate his contract with the Browns on his compensation, being able to get a percentage of the merchandise, which has definitely yielded well for him. This new era of how we establish contracts is starting to really reflect itself in a few different ways and areas. And one of the assets of blockchain technology and cryptography and cryptocurrency and this digital evolution that is happening real time is that there was an article that I recently read that I want to point out really quick that talks about how these types of structures will essentially yield a different type of, we'll just say, approach when it pertains to contracts. And so imagine a brand agrees to pay an athlete about $50,000. And once they post 3 branded videos on, it could be on Instagram, X, Snapchat, whatever it may be, with blockchain, that can be coded into a smart contract. So once you do 1, 2, and 3, we develop this chain that has a block that has these rules that once you execute this, you will now be verified, right? You've done these steps. It is now verified. The payment is released automatically, right? So there's no delays and no middlemen. And so that's really the biggest challenge that's happening within digital assets, cryptocurrency, blockchain technology is, can we be more efficient, right? Can we be more efficient? And then there's this other term that says, if we could be more efficient with how we codify this asset, how we recognize this asset, how we release the resources tied to this asset, now we can start diversifying the utility of this asset. And so you're seeing these terms like tokenization. So tokenization, that, I would say different terms in different spaces, but tokenization ultimately, when it pertains to these type of contracts, are starting to shift to where the future earnings are going to be turned into like stocks, like shares of a stock, but we're just going to use tokens because that is the most compliant term, right? And so assume, an athlete is going to be an excellent, I'm not a big fan of this because I don't like forecasting something that's tied to physical ability, because if you get injured and all of that, that's tough. Make sure you get your insurance. Lawyers in London, not a plug. They need to cut me a check because we done sent y'all some clients. But with that being said, imagine someone being able to tokenize the future earnings. And so that someone is able to pay into a share of what they are now. And then if they earn more, right, that earnings grow 100%, 200%, 300%, that share, that token gives you the ability to appreciate with it. Also, it has like a design like an NFT to where it gives you, unique access. You could, meet them after the game behind the stadium at a particular location. So it does bring and yield this type of different type of utility. And we've seen it. Like even I mentioned the big 3 earlier. The big 3, shout out to Ice Cube. He was definitely early when it pertained to how to use NFTs the right way. Unfortunately, when there's anything new, there's going to be a good bit of misuse of it. And we've seen that when it pertains to cryptocurrency, digital assets, NFTs. But the blockchain technology is something that folks, you just can't argue with. But we do see this providing a benefit for fans. We see it providing a benefit for corporations, for sponsorships. And it really just gives the community a voice into what they would like to see in the future. And it gives them the ability to invest into what they see in the future if their value is going to, move in that direction. So sponsorships, transparency, right? Like everything will shift with this type of introduction of tokenizing, right? These different athletes and these different contracts and these different opportunities. And so now there's a number of risks and challenges tied to it. Of course, regulation is yet to be able to wrap its arms around what that looks like. token prices, due to the lack of regulations, due to the lack of infrastructure, there may be a swing in pricing, right? And so volatility is definitely going to play a role. And then just the state by state, because you can have federal regulation, but you're going to need state by state regulation. So we're super early in the implementation of something like this. But at the same time, it is something that we do see playing a role. The Robinhood CEO was recently interviewed, and he was talking about tokenizing stocks on the stock market, because stock market operates between a confined amount of time. It's closed on the weekends, closed on holidays. The one thing about cryptocurrency, digital assets, and if you are able to tokenize these equities, it gives you the ability to essentially trade 24/7, regardless of what's going on. That definitely opens up different markets across the globe to be able to play ball within, our economy and our ecosystem. And so really, really interested to see how that continues to evolve and shift.